Let's talk about the stock of EABL, East Africa Breweries Limited. Should you buy the shares of EABL? Should you hold, or even so, should you consider selling because the stock isn't enticing? I'm going to speak about EABL dynamics in this video for you to really appreciate what the prospects when it comes to the stocks of EABL look like. As a starting point, I'd like to start by mentioning that the stock just delivered one of its strongest performances in years. And I'm saying so because EABL's financial year ends 30th of June each and every year. So we have the latest full financial reports. And EABL just reported 18.2 billion Kenya shillings in profit, okay? Up by almost 50% in 1 year. While its total dividend also jumped to 12 shillings and 70 cents per share, which of course is also commendable. And looking at the share price specifically, as we are speaking, the share of EABL is going at 272 shillings per share at the NSE. Looking at performance or change across different periods, 1 day change has been 0. Change over the past 5 days has been a decline of 3.55%. Change over the past 1 month was an increase of 2.64%. Year to date, simply put, how the share has changed or performed this year, 2026, it has increased by 0.46%. And change over the past 1 year, the stock of EABL has increased by 30.14%. Here is the most interesting question. After all this growth, is EABL still a good stock to buy today, or has the market already priced in the good news on this particular stock and business? Let's talk about all that in this video. In case you are new here, my name is Afagzad Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button to subscribe to my channel so that you don't miss amazing videos I bring you each and every day. And I'll still add it, drop a like on this video. And also guys, down here is my WhatsApp number. Some of you reached out asking if I can support you in your investment journey. Yes, I can, by providing relevant information to assist you make informed investment decisions. Okay, so reach out to me on WhatsApp. Let's have a brief introductory call, and then we're gonna devise a way I can provide custom support to you in your investment journey. And as always, I've also attached link to additional resources in the comment section. Down there, the first comment which I've pinned, I've put some links to additional resources which can assist you level up when it comes to investing. So go and check those resources for you to be able to level up so that you become a more savvy investor. Having said that, let's look at the company profile. When you are talking about EABL, what exactly does a company do? And even so, how does the snapshot of EABL look like? EABL was started in 1922. And of course, it was listed at the NSE in 1954, making it one of the oldest listed companies at the NSE. And EABL has a very rich portfolio. I'm saying so because some of its brands which are recognized and people enjoy out there are, for example, beers like Tusker, Guinness, White Cup, Pilsner, Johnny Walker, Smirnoff, Gordon's, Captain Morgan's. Simply put, they have beers and also other types of alcohols. And EABL operates primarily across Kenya, Uganda, and Tanzania, with Kenya being its largest market. And there's something important about this business which you need to know, okay? When you buy EABL, you're not simply betting on people drinking more beer. You are investing in a company with powerful brands, right? With a larger distribution network, with significant market presence, with pricing power, beer and spirit exposure, and access to growing East Africa consumer market, because of course, EABL is also expanding its networks. So that's the business when it comes to EABL. Having said that, what is EABL's investment thesis? from the lens of an investor who wants to put money on EABL. Of course, a few things are going to entice you or attract you to EABL. Among them, at number one is brand strength, given EABL has very strong brand and presence in East Africa. Number two is earnings growth, okay? And I'm saying so because the latest results are particularly impressive. EABL reported 145.95 billion in net sales, representing a growth of 13%. Therefore, it tells you it is doing very well on earnings growth, both on the end of sales and also on profit after tax, as you're gonna see. Then third, dividends. EABL has historically been an important dividend stock to NSC investors and in Kenya. Therefore, looking at this dividend of 12 shillings and 70 cents per share in the financial 2026, that is also enticing to investors. And then number four, you're going to be jumping on regional consumer growth. And I'm saying so because over the long term, East Africa's population, urbanization, and consumer spending are going to really improve and also shape how EABL is going to continue performing, because more and more people are going to embrace their brands and also contribute to the growth of the business. Having said that, let's look at financial performance. How has EABL performed across different aspects on matters finance? Starting with revenue. Revenue has grown. And I'm saying so because in financial 2026, revenue jumped to 146 billion Kenya shillings, right? That is an increase from 128.8 billion in 2025, representing a 13% growth in 1 year. Therefore, on revenue, it is strong. Then looking at profit growth, profits of EABL have also grown, because in 2026, the profit of EABL was 18.23 billion Kenya shillings. And comparing with last year's profit after tax, last year's profit after tax was 12.2 billion Kenya shillings. Therefore, on profit after tax, EABL has grown by 49%, which is a commendable growth. And why is this an important thing to investors? This is an important thing to investors because investors want to see profit grow, right? Faster than revenue ideally, because it's going to suggest that the company is getting better at converting sales into profits. And EABL is doing that. And then let's look at the third thing, which is EBIT, right? When you look at EBIT, EABL's EBIT for the year 2026 also increased to 32.7 billion Kenya shillings, up from 25.2 billion Kenya shillings. This tells us that the improvement wasn't simply coming from accounting items below operating profit. Also, the underlying business became more profitable. And the major contributors to this is because of volumes growth, cost control, and lower finance costs, therefore also making the underlying business to perform very well. And then the fourth thing under finance which I want us to look at is debt story. This is another area which I really like about the current EABL story. And this is so because EABL had been carrying significant debts, which meant that high interest rates were eating into profits. But that pressure has been easing. During financial year of 2026, lower financing costs became an important contributor to the improving earnings at the company. And this is important because a company with lower debts typically has lower interest costs, more flexibility, greater ability to pay dividends, more capacity to invest, and less financial risk. Therefore, on matters finance, EABL is also doing very well. I can rate its strength to be very strong. And then, looking at dividends, how has EABL fared on when it comes to dividends? Guys, EABL has been doing very well when it comes to dividends. As I mentioned, in financial 2026, the company did increase its dividends to 12 shillings and 70 cents, right? That is a jump from 2025 and 2024. Because 2025, EABL's dividend was 8 shillings. 2024, it was also 8 shillings. Therefore, we are talking about its dividend having jumped 59% in this financial year, which is extremely commendable. So, out there as an investor, assuming you'd put your money down on EABL stock over a year ago, you'd be talking about benefiting from both dividends and also you benefiting from share price appreciation. Of course, the dividend yield is at 4.4%, and the amazing thing is the payout, because the dividend payout ratio on EABL returns is 66.9%, meaning the company is dedicating a good chunk of its profit in sharing with shareholders through paying dividends, right? So can EABL afford this dividend? Given the substantial increase in earnings and improved balance sheet, the dividend appears much better supported than it was during periods of higher leverage. Therefore, as things stand, EABL dividends look sustainable. And then, when you look at valuation, how is the company doing when it comes to valuation? Of interest, of course, is price to earnings ratio, to see how many times this ratio looks at the market, okay? How many times this ratio is at the market. You see, EABL is an excellent company, but that doesn't automatically make the stock cheap. And I'm saying so because at approximately 275 cents per share, right, at the point when EABL was declaring its profit, and of course EABL's market cap of around 213 billion Kenya shillings, based on the late June market data, that places EABL's PE ratio to 11.7 times earnings, which of course, guys, is a decent valuation. I wouldn't say it is extreme. I would say it is a decent valuation. And this is because you have a company that just delivered nearly 50% growth in its profit, reduced financial pressure, increased dividends substantially, has powerful brands, and trades at low teens earnings multiples based on latest results. That shows that the company is doing well. But there is a warning. You should not value EABL based purely on one exceptional year. I'm saying so because if some of the 2026 profit improvements came from lower interest costs and operational recovery, we need to see whether those gains are going to be sustained, okay? And therefore, when it comes to valuation, I can say the company is decent, but then again, we need to have an eye on if the drivers to this valuation are going to be sustained or not, because that is going to be an important attribute which investors out there need to be keen on for them to really say the company is valued very well over a given period of time. And talking about that, let's now look at risks. Which risks is EABL exposed to which could affect the business? Risk number one is excise taxes. This is a big thing because remember, Kenya does tax alcohol very heavily. Risk number two is consumer purchasing power. And this is so because when consumers have less disposable income, they can trade down from premium products or simply consume less. Therefore, consumers' purchasing power is also a risk to EABL. Then, third risk is currency. EABL operates across East Africa. Therefore, currency movements can affect reported earnings and costs. And then, the fourth risk is competition and illicit alcohol. EABL has strong brands, yes, but competition remains. And also illicit alcohol remains a structural challenge for formal alcohol industry. And then the fifth risk is the Diageo Asahi transaction. And I'm saying so because earlier in the year, Diageo did complete the sale of EABL stake to Asahi, which is a Japanese conglomerate. So we might see Asahi maybe introduce its ethics or even business model to EABL, and that might also change the EABL we know and also how it's been performing or even maneuvering in the market. Having understood the risks, let's now look at the future growth catalysts. What can we bank on to see EABL continue to do well in future? Number one is continued volume growth. Of course, we've seen in 2026, we've seen reported volumes increase by about 13%, right? If this continues, then it's gonna mean that earnings are also bound to compound quickly and increase over time. And then number two, premiumization. What do I mean? Premium spirits can generate significantly better economics than mainstream products. EABL's exposure to brands such as Johnny Walker and other premium spirits give it an important growth avenue. And then number 3, lower finance costs. If interest costs remain lower than previous years, more revenue can ultimately flow down to shareholders. So low finance costs is also something which could be a catalyst. And then number 4, regional growth. Kenya remains the core market of EABL, but Uganda and Tanzania provide additional growth opportunities for EABL. So regional growth could also be something which is going to drive the stock of EABL up. And then number 5, strong balance sheet. A less leveraged EABL gives management more flexibility to invest, pay dividends, and of course, pursue growth. Therefore, the future growth catalysts also look good. Okay? Having said this, what is my overall verdict, right? Would I buy EABL today, or even so, what would I do? Overall, EABL is a good business based on fundamentals, right? Given it has strong brands, it has growing earnings, it is increasing its dividends as we've seen, it is improving its balance sheet, and also has an amazing regional exposure. Therefore, yes, I would buy EABL, but not aggressively at any price. Rather, I'm going to stack the stocks of EABL slow but sure, instead of taking my capital and dumping all of it on the stock of EABL. So I'd continue buying or accumulating. What will you do? Will you buy the stocks of EABL, or even so, what will be your approach? I hope you got a thing or two from this video. Look forward to continuing sharing with you other amazing videos next time. Bye bye, and you all stay safe.